Hello, good morning, ladies and gentlemen, and how are you doing today? And also, season's greetings to everyone. Merry Christmas and welcome back from the short holidays. I welcome you all to another session. Wow, before we kickstart the session, let's quickly confirm that we are good to go. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section before we get the session started. So let's quickly confirm we are on the same page. Okay, what's happening here right here in the comment section? Okay. All right, I can see Kairu Karim. Good morning, Kairu Karim. Good morning. Okay, Kari, good morning to you. How about now? How's the audio quality now? Kindly confirm it's good now. Oh, great. Thank you very much, Kari. Compliments of the season. So I'll take this as a confirmation that we are good to go. All right. Okay. I'm so excited to welcome you to another promising session on the Extra and Speed Life. My name is Sheriff Yaramola, and in the next 1 hour, I shall be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, as usual, this is the first trading day of the week. So we are going to be evaluating random pairs. We are going to be choosing random pairs and instruments, which we shall be reviewing. And this will be the pairs we are going to be monitoring for this week. So this is the most appropriate time if you have any instrument, be it commodity, crypto, currency pairs, options, whatever it is that you have. It's the right time for you to drop it in the comment section so that we can incorporate it into our plans for the week. Well, with that being said, let's dive into the chart and let's see what is going on in the market right now. Well, before we go into the details in the chart, it's let's quickly look at the economic calendar, and I can tell you that there is no major macroeconomic event that might want to be looking out for the week. So basically, most of our decision will be um, around technical structures that we will be identifying on the chart. However, we have some medium impact event which will be coming up this week, and one of the pairs we are going to be looking at this week is the pairs that concerns the JPY. So we already had the job applicants ratio, which has came out positive yesterday, and the unemployment rate too. We also had a positive figure for the unemployment rate. So we had negative expected negative um deviation on the large retail sales and retail trade for the JPY yesterday. And for today, we are looking forward to the housing price index, which is a publication that will tell us how the health status of the housing service in the United States. So we're going to be seeing how that is going to be affecting price movement. So we have a consensus that is quite positive um, on this expectation. So let's see how that is going to be. Then we also have the S&P publication for the Case-Shiller Home Price Index. It's also going to be telling us um, the health situation of the uh, home services in the United States. Though the expectations here, the consensus expectation here is not as promising as the previous one. So let's see how this is going to be affecting the US dollar for today. So with that being said, let's dive into the charts and let's look at the structures from a technical standpoint. So as usual, the first commodity we are going to be looking at this morning is the US oil. And we will run through the daily time frame. Let's quickly have an holistic view of what is really going on in the market. Well, the US oil was one of the profitable instruments that we traded last week. So we had I think we closed with over 1,000 pips on the US oil last week as we rode price action from the $74 area into the $80 area last week with multiple entries, and it was quite a profitable week for us as price action came back into the $80 level. Now we will have to look at this from a fresh, holistic point of view, and let's see what is going on the daily time frame. And for the sake of those who are not part of our live session last week, so we could all be should all be on the same page here. So on the daily time frame on the US oil, well, the first thing we observed is the fact that price action has been on a long-term bullish momentum here, which you can see on your screen. As a result of this, I was able to connect a series of higher lows here to give us that resultant bullish trend line. So we had the bullish trend line connected here, and as you can see in the last 2 years, price has consistently climbed, find higher highs and higher lows. However, when we zoom into what has been happening here in the second half of this year, we had this bearish trend line figured out after connecting the series of lower highs, which gave us a picture of a bearish momentum since the month of June. And in the last couple of months, price action has been caught within a consolidation phase that is between the $93.50 level. So we had the resistance point of the consolidation phase around the $93.50 area. Then we also had the support level of the channel at around the between the $80 and the $77 area the last couple of months to give us an consolidation phase, which emphasized the decision in this market. However, at the beginning of this month, we saw a situation where price broke down this demand zone to give us a signal of a possible bearish momentum. And during the course of last week trading session, if you remember, we were looking out for two options that might likely happen here, considering the fact that price broke down that demand zone. We were saying if price comes back and we start seeing selling pressure, this might likely incite another wave of bearish momentum. However, the situation here was not that case, as we saw how price action evolved into something that looks like a double bottom structure, which is a strong reversal pattern. So we had the first touch here of the $70 level during the first week of this month. Price action climbed back into the $78 area. Then we found another low. Price was unable to break the previous low, thereby giving us a higher low at this point. And if you look at the structure here and look at what price action has transitioned into here, it's looking more like a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern. We shall be serving as a yardstick for trading activities. So with the neckline sitting right around the $78 level, we saw the breakout of that structure during the course of last week trading session. So we saw the breakout of the $78 level, which is the neckline of that reversal pattern, to give us a clue that we might be in for a reversal move in such a way that buy momentum will continue right above the $78 level. And this is what happened during the later part of last week. We continue to see buy pressure right above the $78 level. Now, if we take this into consideration, what happened here last month, where price broke down the key level at the $85 level, breaking down that bullish trend line. From a technical standpoint, whenever we have a breakdown of a structure like this, so we have the structure broken to the downside, we expect that price is likely going to come back and do a retest of that structure. And if we take into consideration what has been happening here in the last couple of weeks, it appears that we are going through a retracement phase where price appears to be transitioning into that situation here, where price might likely come back to do a retest of that structure. And when we took the previous impulse leg into consideration using our Fibonacci retracement tool, Running it through the previous impulse leg, we were able to identify a TP target zone if we are joining this buy momentum around the between the 50 and the 78.6% of the previous impulse leg. And as well, that same area might likely turn out to be a sell window for a trend continuation of that impulsive move. So this is what I'm trying to say here for the sake of clarity. So we had this impulse leg that started here in the month of November, took price into the $70 level. And as a result of this move here is more or less a retracement of that impulsive move, where I'm thinking that price might likely come back into the structure, evolve into a reversal pattern, selling pressure on our lower time frame to incite another wave of bearish momentum. So as a result of this, the bullish momentum that began last week might likely culminate between the around the $85 level, that is between the $82.50 and the $90 area. So this is what we are going to be looking forward to this week. The hopes that price might likely continue to the upside, considering the fact that we already have a breakout of this neckline right above the $78 level. Now, with the breakout of this structure now, its price is right at the $80. Remember, last week, price closed at the $80 level area. So during this week, we want to be seeing how participants in this market will be relating to the structure in order to make a decision for this week. So are we going to be having a breakout of the $80 level this week in such a way that price might climb up into the TP target zone we identified here? Or are we going to be having selling momentum right below the $80 level to incite another wave of bearish momentum? So these are the things we are going to be looking forward to here on the US oil. So in order to have a better understanding into what is really going on in this market, we want to understand how participants in this market are actually relating to the $80 level since the beginning of this week to make a decision for the week. So what we are going to be doing now is to scale down to a much lower time frame, just like the 4 hours time frame here, for instance. And on the 4 hours time frame, I was able to identify a typical structure which we can use to guide our trading activities for this week. Now, if we look at the 4 hours time frame here, and if I zoom out for the sake of for the clarity here, you would notice that we have a descending channel since the month of October. So since the month of October, we saw where how price action participants in this market use the $92 level as a strong selling niche, as every attempt to, for buyers to break out of that structure has been met with strong resistance from the sellers. And in fact, following the rejection of that supply zone here at the $92 level, we saw a situation where price consistently found lower lows and lower highs, giving us that descending channel that we have here. So we have the resistant level of descending channel here, and we also have the support level of the descending channel here. Now, during the course of last week trading session, after, at the beginning of this month, we saw our price continue to find selling pressure right around the $83 level. And in fact, if we go to as far back as the month of October, mid-month of October, we saw how the $83 level has been a major determinant of price action. So look at what happened here during the month of October. This level was holding by pressure. So I was able to identify that area as a demand zone as we continue to see buy pressure in the month of November. However, since the breakdown of the structure here, mid-month of November, price has been trading below that structure to further emphasize the strength of the sellers at this point. And if we zoom into what happened last week, we witnessed a breakout of the resistant level of that descending channel to insinuate a possible bullish momentum in the next couple of weeks. Now, with the breakout of that resistant level of the descending channel, what we did next was to identify this temporary bullish trend line. In the meantime, so since the second week of this month, we were able to connect the series of higher lows to give us that temporary bullish trend line. So this bullish trend line shall continue to guide our bullish momentum if price continue to trade above that trend line, we want to be looking out for trading opportunities above that structure. However, if price breaks down this trend line, then we might be seeing this as a momentum shift, which might lead into a situation where price comes back to do a retest of the resistant level of that as descending channel. Remember, we had the breakout of that structure. So, from a technical standpoint, we expect that if a breakdown of that bullish trend line here happens, price is likely going to come back to do a retest of that resistant level of the descending channel. And if you look into the structure closely, it also shares a confluence with that $74 level in anticipation of a trend continuation to the upside. So this is the view we have here on the 4 hours time frame. So in order to have a better perspective here, like I told you on the daily time frame, we want to be seeing what our participants in this market will be relating to that $80 level we identified on the daily time frame. So in that regard, we will scale down to the 1 hour time frame. And on the 1 hour time frame, I was able to identify how price action started this week. So this is what we had here at the beginning of this week. So we had a huge gap, a huge bullish gap. So this is where price closed last week. Price closed at around the $79.40, and it opened this week at right above the $80 level. So we had a gap here, and for me, this is a sign that we might be having a bullish momentum for this week. But we cannot jump into such conclusions yet, as we need to understand technical structure of what is really going on around here. So in that regard, we looked at how participants in this market has been relating to the structure since the beginning of this week. And one thing I was able to decipher here is the fact that price has been caught within a channel that is a 50 cents dollar channel that is between the $80.50 level here and the $80 area. So the $80 level now appears to be the support level for this week, as this is where price has started. And anytime price comes within the $80 level, we have been witnessing buy pressure. So we already have a channel between the $80.50 and the $80 level. So what we are going to be doing this morning is to remain patient to wait out for either a breakout of this channel to give us a sell momentum, that is breakdown of this channel to give us a selling opportunity, or a breakout of this channel to give us a buy opportunity. So this is what we are going to be looking forward to um, during the New York session today. Now, we had the breakdown of this channel here during the early hours of today, which gave us a sign that there is a tendency that sellers might likely come in at this point. And if we look at since the breakdown of that structure, we have a doji candle here, which indicates an indecision in this market right now. So for me, what I'll be advising you to do here, if you are not yet in this trade, is to wait out for price action to drop below the $80 level here for us to sell the US oil. And if price drops below the $80 level and price continue to dry to the downside here, even further breaking down that bullish trend line, then we want to be adding more position if we start seeing selling pressure below the bullish trend line that we have here to add more position to our existing trade on the US oil. Now, there is a catch to this if price breaks down the $80 level, and that is if price breaks down the $80 level and price continues to the downside. Hereby touching this bullish trend line here, I will be advising us to move our stop loss to lock in some profit, or move your stop loss to break even at this point, as we want to see how participants in this market will be relating to this trend line in order to make a decision of either adding more position to our sell position or getting ready to join a trend continuation to the upside. Remember, this bullish trend line has been holding bullish momentum since the beginning of this month. So we want to be patient enough to see how price will relate to that structure. So we want to be moving our stop loss to break even or lock in some profit, and let's see if price will break down that structure. So if price breaks down that trend line, then with selling pressure below the structure, then we want to be adding more position to our sell trade. However, if price continue to see buy pressure right above this bullish trend line, we might be in for another wave of bullish momentum to the upside. So we want to be getting ready to join that rally when it happens. So that is the first situation here that we shall be looking forward to if price breaks down dollar level. Now, if the breakdown of the $80 level does not happen and price continue to find higher highs on our lower time frame in such a way that it leads to the final breakout of the $80.50 level, sign that we want to be joining the bullish momentum to the upside. And if we are lucky enough, we continue to see buy pressure above this $80 area or around the structure, this is a very good confirmation that we should join the trend continuation to the upside. So we have a very simple setup here that we can use to guide our trading activities for the week, and that is that flat channel between the $80.50 level and the $80 area. So if price trades below the $80 level, we want to be looking for selling opportunities. And if price breaks out of the $80.50 level, we want to be looking out for buy opportunity on the US oil. So these are my views here on the US oil for today. And I hope I was able to simulate all the possible scenarios that might likely happen here. And if you think or you need me to make further clarifications on an aspect you don't understand, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chats and see if there are any questions before we move on to the next pair. All right, so what do we have here? Hey, Francisco, good morning. Morning, season greetings to you. Bulumba, good morning to you. Hey, innocent babe, good morning. Merry Christmas to you too as well. All right. I don't just sit Alex. All right. Good morning to you. Thank you very much, innocent babe. All right. Okay. Case AR85. I hope you all having a wonderful holiday. Okay, boy to go. All right. 651. All right. Okay. Dongen Sit is asking which currency are we talking? Well, it's the US oil. Always look at the top left corner of your screen. You right there. You're saying the um, instrument we are talking about. So the top left corner of your screen is where the instrument is indicated. So next time, 603, good morning. All right, innocent babe, that's good. All right, in the absence of no questions, I want us to move on to the next option. So, the next option we are going to be looking at this morning is the US Tech. And on the US Tech, well, last week we actually had a very profitable experience on the US Tech last week as we were able to take advantage of the sell momentum while it broke down the $11,200 level, hereby giving us about how many pips was that? About 410 pips. And remember, at the beginning of the week, we took advantage of some buy potential above the $11,000 level, which also gave us around, let me see how many pips was that. Price moved about 250 pips in our favor before we started seeing that bearish momentum on Thursday last week. Now, going into the new week, what is going to be our expectations for today? Well, the first thing we want to be doing on the US Tech is to have an holistic view of what is really going on in this market. And as a result of that, we shall be scaling up to the daily time frame where we are going to be having a long-term perspective of what is really going on here in order to make a decision on our lower time frame. Well, on the daily time frame here on the US Tech, the first thing you will observe is the fact that price action has been on a long-term bearish momentum, and as a result of this, I was able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen right now, as price action consistently respected that trend line throughout the year. And in fact, if we zoom into what has been happening since the month of June, we begin to see how buyers begin to negate all selling pressure around the 11,000 level. Here we saw the first attempt by the buyers to negate all selling pressure in the month of June. And if we fast forward into the later part of the month of September, stroke the early days of the month of October, we started seeing another buy pressure around the 11,000 area. But one thing that was noticed here is the fact that the buy pressure around this area wasn't as strong as what we saw here in the month of June. see we started seeing selling pressure come in as sellers continue to negate all buying attempt around the 11,700. So as soon as price gets into the 11,700, we continue to see selling pressure, and in fact, this lasted for over a month here to further emphasize the strength of sellers. However, during the first week of the month of November, we finally witnessed a situation where we had an engulfing candle that broke out of the $11,700 level. The first time in 6 weeks, we had the breakout of the 11,700, and there is an interesting structure here that happened. This is the breakout of the 11,700. So, what we noticed after the breakout of the 11,700 to the upside is the fact that price action was caught within a consolidation phase between the 12,050 and the $11,500 level to emphasize the indecision in this market. And this is as a result of the breakout of that structure. And considering the long term bearish momentum here, there was some skepticism in the market that that is that negated all bullish momentum here, as we saw the breakout of the 11,700 never lasted, as we saw that as soon as the breakout of above the 11,700 happened, we begin to witness selling pressure. And during the second week of this month, we saw a sharp rejection of that 12,050, which also shares a confluence with the bearish trend line to incite this a bearish momentum, which led to the breakdown of the $11,500 level at a level which has been holding by pressure for a month before the breakdown happens, further emphasizing strength of the seller. So we actually rode that move all the way down into the $11,000 level here, and since the breakdown of the 11,500, price has been trading below that structure. And from a technical standpoint, whenever we have a breakdown of a structure like this, we should be expecting that one point in time price is likely going to come back and do a retest of that structure, cite another possible wave of bearish momentum to the downside. And if we look at the situation here on the US tech since last week, we notice that price has been caught within a consolidation phase around the $11,000 level. So at this point in time, there are two likely scenarios that might happen here. This consolidation phase might evolve in a reversal pattern that might price back into the 11,500, where I said we might be looking opportunities to join that decline to the downside, or we could be having a trend continuation pattern around the $11,000 level or probably below that structure that will incite a bearish momentum to the downside. So, in order to have a better understanding into what is really going on here, we need to scale down to the lower time frame so that we can see how participants in the market is actually relating to the $11,000 level since the beginning of this week in order to make a decision on the US tech. And at this point in time, um, the $11,000 level shall be our key level for this week, and this level shall guide our trading activities. So, how are we going to be making use of this level for this week? Well, if price continue to trade above that 11,000 level, well, we want to be looking out for buy opportunity above that structure. But if price breaks down the $11,000 level, then we want to be looking out for selling opportunities below that area. So let's quickly scale down to the lower time frame. Let's see what structure price action is evolving into here on the lower time frame in order for us to make a decision for this week. Now, scaling down to the 1 hour time frame, I will just write down to the 1 hour time here, and let us see how participants in the market has began the week. Now, on the 1 hour time frame here, the first thing you would observe that price closed last week at around the $10,970 level. We had the 10,970. That's where price closed last week. And at the beginning of this week, price started at around the $11,050 level, giving us a huge pull gap. And at the same time, price is trading above the $11,000 level. Remember how important I said $11,000 level on our daily time frame. So we shall be using the $11,000 level as a yardstick for trading activity. And as soon as price started the week at 11,015, we saw our price was caught within a flat channel between the 11,090 and the $11,015 area to further emphasize the indecision in this market. And you know, from a technical standpoint, whenever we have a flat channel like this, the next thing we want to be doing is to remain patient here, as we don't want to be in a hurry to join any move. So we want to be patient enough to wait out for either a breakout of this channel or a breakdown of this channel to give us a signal of where price is likely going to be going. So if a breakdown of the $11,015 level happens, possibly shares a confluence with that 11,000 area, then we might be looking out for selling pressure below the structure on our lower time frame to join a trend continuation to the downside. That is one scenario that we want to be looking forward to on the US tech. And if on the contrary, we have a breakout of the $11,090 level, followed by buy pressure right above the structure, we want to be thinking of buying the US tech. And one thing I want us to take note of here, while buying the US tech, is the fact that the $11,200 level, which was our key level for last week, needs to be observed too as well as soon as price gets into that structure. So as soon as price gets in structure here, we want to be moving our stop loss accordingly, lock in some profit, and let's see how price action will relate to that level. And if at any point in time we start seeing selling pressure right below the structure, then we will have no choice than to get ready to join another decline downside. But if instead a breakout of the 11,200 happens, followed by buying pressure right above the structure, then that will be another opportunity to add more position to our existing trade. And for the TP target on the US tech, I will be suggesting that we put our TP target around the 10,500 level time, and let's continue price action how far the bullish momentum will go if a breakout of the 11,090 happens. Now, for the selling momentum here on the US tech, how far will this bearish momentum go if we cite a breakdown of the 11,015 or the $11,000 level? Well, at this point in time, I will suggest that um, we use our Fibonacci extension tool to project this impulsive that started last week, pulse leg that started around 11,075. And if we extend the T impulse leg in area using our Fibonacci extension tool, we should have been aiming at an area between 7.2 and the 1414 area as our TP target. So we should be having somewhere between, hold on a second, 1,000 and the 10,570 level area as our TP target if price breaks down the $11,000 mark. And one thing I also want us to take note here is sell momentum continue after the breakdown of the 11,000. As price gets into the 10,800 level, an area which has been buying at least because of last week trading session. So our buy pressure came in around the 10,800. Well, as soon as price gets into that level, we want to be moving our stop loss accordingly. And if a further breakdown of structure happens, out all the buy position there, with selling pressure below level, we'll be getting ready to add more position to our existing trade. So these are my views here on the US tech. So I will advise us to be patient here and let's wait out for this indecision to um, detect where price will be going. So we already have a simple channel here around the 11,090 and the $11,015 level where we are either looking out for a breakdown of this channel or a breakout of this channel to give of where price will be heading for this week. So that is my view here on the US tech. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section uh, of this video. Well, I okay. All right. So, um, Merry Christmas, 524. Okay. All right. So, in the absence of no questions, I will assume that we are on the same page. So, let's move on to the next pair. I hope we are able to cover as many pairs as possible today so that we can have a varieties of options to choose from um, for our trading activities for this week. So, the next here we are going to be looking at today is the USDJPY. And remember, the USDJPY was one pair that was profitable for us last week, though we missed out on some very important move that happened last week. Remember, we had this impulsive move last week. I missed out on this move, but thank goodness the market gave us another opportunity to join the decline at the breakdown retest of the 133.00 level, which gave us about 300 pips with multiple entries. And at the beginning of the week, also, we also had buying opportunity right above the 135.600, which also gave us about 100 or 80 pips thereabout. So it was not a bad week for us on the USD JPY last week. And as we head into the new week right now, we want to be taking a fresh look at what is really happening in the market. And before we go into the details on the lower time frame, let's quickly have an holistic view of what is really going on in this market. Now, on the daily time frame here, it is very obvious that price action has been on a bullish momentum here. At least since the beginning of the year, we have been finding a situation where price has been finding higher highs and higher lows to emphasize the strength of the buyers in this market. However, when we zoom into what has been happening since the mid second half of this year, I think in the month of June, we started seeing things become a little bit interesting as we were able to identify a key level at the 135 Japanese yen level. And in addition to the structure was this um, price, this technical pattern we identified in the month of August here, where we saw a reversal pattern sitting right on the bullish trend line in the form of a double bottom structure. And whenever we have a reversal pattern like this, we want to be identifying the neckline of that area where a breakout of the neckline should be guiding our trading activity. And fortunately, we had the breakout of the 135 Japanese yen level, which is serving as a neckline of that reversal pattern. And in fact, price moved significantly well after the breakout of that structure. And it actually took over 3 to 4 months for price action to come back and do a retest of that neckline area here in um the last day of the month of November. We saw price come back to do a retest of that structure. And since the beginning of this month, we saw a situation where price was caught within a channel of the 138 Japanese yen level and the 135 Japanese yen area. And as at last week, we were looking out for either a breakout of this channel to the upside to look out for buy opportunity. That is a breakout to give us a buy opportunity or a breakdown to give us a selling opportunity. But this breakdown here happened so fast that we didn't have the structures to join that decline to the downside, but we were able to take the second phase of that bearish momentum, which gave us about 300 pips. Now, the structure become a little bit more interesting when we saw that price came drop tested the 131 Japanese yen level. And what did you see here? As soon as price tested the 131 Japanese yen level, we started seeing buy pressure come in from that level. And if we look into the past here, we saw that in the month of August as well, where we saw that reversal pattern here, so that as soon as price tested that level, we started seeing buy pressure coming from that area. And the same thing appears to be happening right now as we have buy pressure sitting right above the 131 Japanese yen. So going in, I think we might be having a bullish momentum that might see price come back retest of the neckline here. Remember, we had the neckline at 135 broken last week. And from a technical standpoint, whenever we have a breakdown of a structure, we expect that one point in time, price is likely going to come back to a retest of that structure, cite another wave of bearish momentum. So that is one scenario we shall be looking forward to this week. So we are going to be seeing if the bullish momentum continues here, we are going to be seeing how price action is going to be relating level here at the 135 Japanese yen level. So if we start seeing selling pressure below that structure, then we want to be joining a bearish momentum However, if price breaks out of the 135 Japanese yen level with buy pressure right above the structure, then it appears that the bullish here is getting stronger, and we shall be having our typical target sitting around the 145 level. And the reason why I'm going to be having my target there level shares a confluence that bullish trend line that we identified earlier. And one thing about the bullish trend line is like that during the course of last month, for the breakdown of trend line, and from a technical standpoint, there is a likelihood price might come back, retest of that trend line, probably like another wave of bearish momentum, or probably to break out of that. But when price gets to that level, I'll be deciding line of action will be. So now this is the scenario we are looking for here. Buy pressure right above the 131 Japanese yen level should be an comfortable in our buy position. That is one scenario we are going to be. Then the other possible scenario that could happen is price breaks down the 131 level, taking out all the buy position, gathering some for selling pressure, and then if that since pressure below the short time frame. But with the look of things right now, we'll be turning towards a bullish momentum for this week. But if the contrary happens, also want to be getting ready when that happen. So for the week right now, we shall be looking at our price action dating to guesses cipher what our next line of action will be. Now there is one thing I would like to show you for our time frame. The very simple structure guide our trade and our time frame. And before I go in from a long-term perspective, so since the mid-month of October, we have a situation where price has been lower lows and lower highs, and as a result of this, I had this bearish trend line figured out. The trend line, green dotted line, trend line we were able to identify after. Right. Now, zooming into what has been happening here since mid-month of November, we have the 138 Japanese yen level. At one point in time was by pressure before it was in the first day of this month of December. And since the breakdown of that structure, have been also sharing a confluence with a bearish trend line to emphasize the strength of the sellers. And now with this current structure, it makes more sense to continue to look for selling opportunity here as price action continue to find lower lows and low. However, when I price action last week, I'm a little bit here. So as you can see here, structure was able to identify here on the 4 hours time frame. So this is what we had here on the 4 hours time. We have following this impulsive move downside, had this impulsive move downside, and as soon as price tested the 131 Japanese yen level, I showed you this level of the day. As soon as price tested it, we saw our price transitioned into a consolidation phase, and the consolidation phase looked exactly like a rising wedge pattern. And from a technical standpoint, rising wedge is trend continuation pattern. And one thing I was be expecting at the beginning of the week, a breakdown of that trend line, of this temporary trend line here. If breakdown of the trend line happened at selling pressure downside here, opportunity. However, time that price action does this, as sometimes we normally have breakout to the upside of this kind of channel, give us a bullish momentum. And now, if we look at the impulsive move and that impulsive move consideration, our Fibonacci running it to the pulse leg here, I was able to identify an area. Yeah, I think that the following this impulsive move downside, that this move here likely a retracement of that impulse leg, where we might price retrace it here between all the 78.6. I'll be looking at pressure So in that regard, I identified that zone, and with the hopes of taking advantage of opportunity price break out of structure. Look at things here. Price breaks out of the structure, and to the upside, we have a mid about 100 pips to catch here and a maximum about 208 catch here. We're able to counter opportunity. And now, so going into cross, I was able by this 133.00 level, which will be serving as a yardstick for trading activities. So as you can see here, since Tuesday last week, we saw that every attempt by the buyers to out of structure has been met with selling pressure from that level. So pressure from Friday, we saw how that has been holding selling pressure, pushing price to the downside there in that regard. So going into the new week now, we want to see how participants in the market actually relating to the 133. Is the selling pressure going to continue, or are we going to be having a breakout of that 133.00 level? And to have a better perspective, is we have to scale down to our time frame. And on the 1 hour time frame, I was identify a simple channel between the 133.150 and the 132.650 level. So this is how price started this. So this is the reference point for the week. This is how price started this week. 132.150 rejected by pressure, and the one it's selling pressure. So as a result of this, I identified that channel. And one thing I will, whenever we have such channel like this, is to remain patient and wait out for a breakdown of this channel to give us a sell signal to join a sell momentum, or a breakout of this channel to give us an opportunity by USDJPY. So before the live session today, I placed my buy stop order right above the 133.1 and my sell stop order below the 132.650, where I will be looking out for either of this trigger to take me position for this week. And as you can see right now, we already have a breakout of the 133.150, at least in the last 50 minutes now. Price has been trading above the 133.150, which is a signal that we might be having a bullish momentum right now for at the beginning of the week to bring price into that area we said we shall be using as our TP target. And one thing about the TP target area here, which I didn't show you on the 4 hours time frame, I want to quickly run through that on the 4 hours time frame. So if we look at the 4 hours time frame once again here and look at the TP target zone we identified here, you can see that also shares a confluence that bearish trend line, which has been holding selling pressure since the month of October. So we want to see how price action is actually going to structure. And one interesting thing about the trend line also, that is 5 point, a level which has also been a major determinant of price action. We are going to be on this area and then look out for how price action. That's seeing selling pressure right below that level here, that we might be getting ready to join another wave of bearish momentum. However, breakout of that structure happens for buying pressure structure, and this will welcome add more position to our buy position here. So for me on the USDJPY, I'm already in the buy position now, which I good. So I hope this buy momentum will continue. And if you are part of this journey, well, let's raise up for the next couple of hours and see if we will continue to see buy pressure above the 133.150. So for selling opportunities, I've told you we are not going to be looking for any selling opportunity here unless price breaks down this 132.650. And we can see it also shares a confluence with the support um, support level of this channel. So remember, we have this temporary bullish trend line here, which has been um, guiding bullish momentum. So if a breakdown of that channel, of that support level happens, followed by selling pressure below that structure, we want to be looking out for selling opportunities on the USDJPY. So this is the simple scenario we are going to be looking forward to on the USDJPY for this week. So we have a channel between the 133.150 and the 132.650. Anywhere above the 133.150 is a good place for us to have a buy position, and anywhere below the 132.650 is a good area to look out for selling opportunities on the USDJPY. So the 133.00 level still remains a key level that we shall be using to guide our trading activities for this week. If you have any questions whatsoever regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be taking some. I'll be looking at the comment section from time to time to see if there are any questions in that regard. Please, first time in my life. Okay, all right. Um, okay, who else is here? Who else is here? Okay, any question whatsoever? Um, all right, no question. Hey, Steamroller, good morning to you. Merry Christmas. Compliments of the season. How are you doing today? All right, you're welcome. I'm glad you found them useful. It's okay. It's okay. All right, Steamroller, glad to have you around. All right, in the absence of no questions, can I still take one more pair today? Let me see. We have 6 more minutes left. Okay, let's quickly look at one more pair before we close for today. And the pair we are going to be looking at today is the XAUUSD. And let's quickly have an holistic view of what is really going on in this market. So, in that regard, we shall be scaling up to the daily time frame, where I will be sharing with you what I was able to identify here. So on the daily time frame, it's very obvious that we have been on a bearish momentum, at least since the month of March of this year. And as a result of that, I was able to connect the series of lower highs here to give us that resultant bearish trend line, which was finally broken in the month of November. I think the first week of November, we saw the breakout of that trend line to negate, to reveal the fact that the bearish trend line is no longer strong to hold selling momentum. And besides the bearish trend line on the daily time frame is the $1,800 level, which has been a major determinant of price action since the beginning of this year. If we look at what happened here since the month of December stroke the month of February of this year, we saw how that level accumulating by pressure, which finally led to the breakout of that structure, pushing price to the 2000 level. So that is one thing. That is one scenario that happened at the beginning of the year. Then, if we move into the month of May, we also saw another buy pressure coming in here. But unfortunately for the buyers, this pressure wasn't strong enough as sellers took over this market, led to the final breakdown of the $1,800 level in the month of July. And since the breakdown of the 1,800, the month of July price has continued to trade below the structure to further emphasize the strength of the sellers at this particular point in time. And as a result of this, I was able to identify that area as a supply zone. And the reason is simply because every time price comes with it, I've been selling pressure in the second half of the year started. Now, if we zoom into what has been happening here in the last couple of weeks now, I think since the beginning of this month, we saw that as soon as price gets into the $1,800 level, though we have been seeing selling pressure from that area, but the most important structure that we need to take into consideration here is the fact that price has been caught within a consolidation phase, hereby emphasizing the indecision in this market. And from this perspective that we have here, it is very important that we note that we are at a very critical point in this market right now, as there is a tussle for the 1,800 between the buyers and the sellers right now, as we don't know who is going to finally have the lead on this one. As sell buyers break above the 1,800, we see selling momentum again, pushing price below the 1,800. So one thing we are going to be doing here is to understand this current structure here and use the $1,800 level as a yardstick for our trading activities going forward. So if price continue to trade above the 1,800, and if we have situations like a breakout of the 1,800 followed by buying pressure right above the structure, we want to be looking out for buying opportunity on our lower time frame. However, if price breaks down the $1,800 level with selling pressure below the structure, we might want to be looking out for selling opportunities with the hopes that this might kickstart a sell-off of the bullish momentum that started the month of November. So it might likely be retracement in anticipation of another wave of bullish momentum. So in this regard, we want to be scaling down to a much lower time frame so that we can have a better perspective of what is really around the $1,800 level. And let's see how participants in this market are actually relating to current structure. As a result of this, I was able to identify a simple setup here on the 4 hours time frame. Let's start with the 4 hours time frame first of all before we scale down to the 1 hour time frame. So on the 4 hours time frame here, the first thing I was able to identify is the fact that we have been on a bullish momentum since the month of September here. So I had this demand zone identified here, and this demand zone was so strong that it cited a bullish momentum at the beginning of the month of November. And since then, price has continued to find higher highs and higher lows. And we had a breakout of this trend line here in the second week of the month of November. And since then, price has been trading above this bullish trend line, emphasize the strength of the buyers in this market. And with the sell, and as soon as price continues to climb to the high side, and one thing we should take note here is that as soon as price goes into the 1,000 month, since the beginning of this month, I've been with selling pressure to 1,010 by this 1,010, and we have been witnessing selling pressure around that area to give us a clue that the bullish momentum is gradually diminishing as time goes by. Now, with the selling pressure around the 1,000 level, we need to be very careful here, mindful of taking unnecessary buy position at this point. So we need to really understand what is really going on in the market. Now, if we look at the current structure here, price action came down in line for a little consolidation phase around the trend line, and it appears that this bullish trend line is continuing to hold buying pressure on the XAUU. I would like to state here is that if price still remains above the bullish trend line, also shares a confluence with the 1,800, we want to remain comfortable in our buy position. However, if price breaks down the bullish trend line in such a way that you can, it also breaks down the 1,800, which I told you on the daily time frame that if price drops below that level, we want to be looking out for sell pressure join a bearish move downside. So as long as price remains above the that trend line, we continue to look out for buy opportunity. So now let's zoom into what has been happening since the beginning of this week on the 1 hour time frame. And so if I zoom into what has been happening since the beginning of this week here, we saw that price has broken the 1,800 to the upside, and in fact we saw price started the week at around the 1,798 here. So that appears to be the support level for this week. So we already have a support level for this week. I personally missed out on this opportunity. I had seen this at the beginning of this week. I would have taken advantage of this buy opportunity to the upside as a breakout retest of the $1,800 level happens. But if you took advantage of this move, well done to you for being on standby to catch the breakout retest of the 1,800, as you will currently be running with over 700 pips in profit. But if you had missed out on that move, well, it's okay. It's still the beginning of the week, and there are still quite a lot of opportunities coming in as we as the week runs by. Now, so what I was able to identify at the beginning of the week is the fact that price has been caught within a channel of the 1,086. Yeah, the 1,008. We saw that level has been holding selling pressure at the beginning of the week, and then we had the support level at the 1,799, somewhere around the 1,800 level, which is more reasonable to consider as a support level as well. Now, one thing I did here, I shared this on my public platform, anyways, and I said if a breakout of the year happens, we want to be joining a rally to the upside, and this is exactly what happened here as we saw the breakout of the 1,806 last couple of hours. And if you actually take advantage of, currently be running with about 250 pips in profit, and if you are actually taking advantage of that move, I will be advising you to move your stop loss accordingly, lock in some profit at the break. Sorry, I will suggest move your stop loss to break even at this point. point locking any profit here. Just move your stop loss to break and let's see if the bullish momentum will continue. And for those who had missed out on this opportunity at the breakout of the $1,086.50 level, well, I will advise you to remain patient here and wait out for structures that will guide a bullish momentum. Now, what are we going to be looking out for? The first one is price might likely come back to do a retest of the 1,086. Very, very possible. If it does that, let's get ready at the site of buy pressure on our lower time frame to join that trend continuation to the upside. And if that does not happen, then I will suggest around this, as we already have a here. Oh, second, let me put out my line chart. We already have a that's around the 1,008. Yes, have a structure ready. Have it at the 1,008. Let's label this clarity. So we have it $1,809, right? We already have this. We have the structure. You had missed out on the 1,008. That is this. Missed out on the opportunity here. And we already have a price does not come back to do by side and break out of the 1,809 by the other side, follow at upside. At this point in time where we know at this standpoint, previous in last take finding an target $835 and the 1,008 about 2,000 about 3,500 profit if price action that direction. What I'll be suggesting us to have our target somewhere around that 1,835 14. Now there is a catch to this move if price continues upside. Now that is the take this in. Well, as you can see on this holding selling niche in this market, as every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers. So one thing I would like us to do here is if the bullish momentum continues, break out of the $1,809 level, continues to the upside, as soon as price tests the 1,000, I will be advising you to move your stop loss, lock in some profit, and let's see how price action is going to relate to that structure. So if selling pressure appears below that level, then I want us to be getting ready to sell at the site of a breakdown retest on our lower time frame to the downside. However, if price breaks out of the 1,820 followed by buying pressure right above the structure, want to be thinking of adding more position to our existing trade on the XAUUSD. So this is a very simple setup we have here on the XAUUSD. So let's continue to look out for this buy opportunity if price continues to climb above the $1,809 level. Now for the sell position here, I will be um, uh, thinking of selling only if price breaks below the $1,800 level. And I don't know what is going to happen during the New York session around this area. So if anything like breakdown of the 1,806 happens, followed by selling pressure below the $1,806.50 level, well, I will suggest that we sell. Let's risk a sell position there. And if this leads to a further breakdown of the 1,800, which also shares a confluence with the bullish trend line, a retest to structure should be giving us further confirmation to add more position to our existing trade. What we are going to be looking forward to the USD. I hope I made myself clear. If you have any question, feel free to drop your inquiries in the comment section of this video. Steamroller said my voice is breaking up. Is it really breaking up? Can someone please confirm that is true? I just checked my monitoring device now. It doesn't appear it's breaking up. I would suggest you restart your app for better audio quality, I guess. Let me know. Okay, thank you, Steamroller. It's been better. Okay, Innocent Babe say yes, was breaking. Okay. How about now? I think it's better now, right? It must have been network issues then. Okay, I'm sorry about that. Okay, so now we are at the end of the session right now as we have closed with the XAUUSD. But before I drop the curtain on this live session, let's quickly take a recap of what our expectations are for today. Okay, thank you, Innocent Babe, for that confirmation. So the first commodity we looked at today is the US oil, and on the US oil, we already have a simple channel that we are looking out for trading opportunities here, and that is between the $80.50 level and the $80 level area. As we can see, price has been caught within the structure since the beginning of this week, and the structure which is right above the $80 level area, which has a tendency of a bullish momentum at this point. However, even though we're expecting a bullish momentum, it lets us wait out for the structure to give us the lead on where price will be going. So what we are looking forward to in the New York session today is either a breakout of the $80.50 level to join a bullish momentum to the upside, or a breakdown of the $80 level to join a sell momentum to the downside. And one thing I stated here about the breakdown of the $80 level here is the fact that if we have a breakdown, selling pressure, and we join the sell momentum to the downside, one thing we should take into consideration is this bullish trend line that we have here. So as soon as price tests this bullish trend line, we want to be moving our stop loss to either break even or lock in some profit on the sell position here, and wait out for price action to relate to the structure to determine if we are going to be adding more sell position, or we are going to be getting ready to buy the US oil. So if we start seeing buy pressure above this level, then we want to be getting ready to buy. Breakout retest on our lower time frame should give us a confirmation to buy the US oil. So we shall be taking out of our sell position at probably at a worst case scenario break even, and price continue to the upside. But if a breakdown of the trend line happens, then selling pressure below the structure, that will be giving us a confirmation to add more position our sell position right here. That is one scenario we are going to be looking out for oil. And if a breakout of the 8.50 cent level followed by buying pressure above that structure, a lower time frame buying the US oil. So let's prepare ourselves. Let's get ready in order to catch that move when it finally happens. Then we moved on to talk about the US tech. And on the US tech, we also had a simple setup that we should be using to guide our trading activities for this week. So though we had the bullish gap here at the beginning of the week, right above the $11,000 level. So we had the $11,000 level as our yardstick for trading activities for this week. And in addition to the $11,000 level is the simple flat channel we have here between the 11,090 and the $11,015 area. So we have the support level of that channel here. So I have told you that we want to remain patient to wait out for either a breakout or a breakdown of this channel. So we can look out for a breakout to buy this US tech, or a breakdown of this channel to sell the US tech. It's quite simple. So the next one we talked about USDJPY, where I told you I've already gotten my position triggered here as price action broke out of channel above the $133.150 level. And if you are part of this trade, well done. Let's see how far this bullish momentum is going to go. And if you had missed out on this opportunity, we still have another opportunity. If price comes back with buy pressure above the structure, we still have another opportunity to add more position to our existing trade. However, if even though we are looking out for buy opportunity here, remember I told you that this is a counter trend opportunity where this bullish momentum might lead in price coming into the 50 or the 78.6 area, where we said we shall be looking out for selling pressure to join another wave of bearish momentum downside. So this is more or less a counter trend opportunity right now. That is the breakout of the 133.150 level, more or less a counter trend opportunity at this point. Now, if at any point in time At any point in time, price breaks down the 132.6 level here, probably take us out of the buy position, breaks down this, but we identify this rising pattern here, where breakdown of that channel hides a bearish moment. Breakdown of the selling and a further break. I also made mention like that have a demand breaks down again are still market. How this is why this week. Anywhere below this level gives us comfort for buying for our buy position. And if it price drops below the 133.00 level, we continue to look out for selling opportunities. Then we went on to close the day with the XAUUSD, that is the gold. And on the gold too, I told you how I've gotten my position triggered as price action broke out of the $1,806.50 level this morning. And price still remains above that structure with a possible uh, bullish trend continuation to the upside. And I told you that I missed out on this opportunity breakout retest of the 1,800. Remember how important the $1,800 level is on the daily time frame. And if you are joined that, you will be in profit. But if you are not, we are still have other situations running here where we could actually take advantage of opportunity. So for those who had missed out on the 1,806.50 level here, I have said that we have this 1,800 level. Let's look out for a breakout rate. A structure give us an opportunity to add more position to our existing trade. And there was a catch here. I said if price continues to the upside and it gets into the 1,820, want to be moving our stop loss accordingly, lock in some profit as we want to see how price action is going to structure. Remember, this structure has been a strong selling niche for participants in the market since of this week, or beginning of this month rather. Want to see how price is going to relate to that structure in order to know if we are going to be adding more position to our buy position, or we are going to be getting ready to sell at the site of selling pressure below that structure on our time frame. Please let's put this in mind while joining the counter trend opportunity. Then I also stated here that price breaking down the 1,800 level is a very good sign that selling coming in here. So a breakdown of the 1,800, a level which also shares a confluence with that bullish line, is a very good signal that we want to be XAUUSD. But there is a catch I stated here around the 1,850, and one thing I stated here is we got taken out of the current buy position here as price break down the 1,850 and we structure on our lower time frame that is set as it's all buying attempts around this want to be price will be 1,008, and if it does selling price level should to add more position to our existing trade. So these are my views here so far. So we were able to trade the US oil, US tech, USDJPY, and the XAUUSD for this week. So I hope I was able to make things a little bit clearer for you for the New York session today. And my hopes are that you'll be on standby so that you can catch these moves when they finally happens. Remember, we are not getting too excited at the sight of a breakout. That is a signal. We want to remain patient. Look out for retest of structure on our lower time frame before we join that uh, direction of price action. So on this note, I want to wish you best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. So let's come here again and review all the pairs we have been monitoring so far. Let's see how well these pairs are doing, and at the same time, get prepared for the New York session tomorrow. Do have a wonderful evening, and okay, Steve Rolla, thank you, and have a wonderful and blessed day. Compliments of the season once again. Bye bye.